economic slowdown as well as a banking crisis that is continuing are the main stories of the day today. This is having a push and pull impact on none other than AMC stock. And we'll talk about AMC's data. A key number that I've been looking at continues to go higher, and I think that is a good thing. Overall, today, seeing the S&P 500 down about 1.5%, AMC stock currently down about 4%. Yeah, it's not a great day, but it's also not a terrible day. A lot of other stocks are down much more than AMC. Personally, stocks that I own that quote unquote are better businesses are down a lot more. So we're going to get into this situation. This comes at a very interesting time as this narrative of sell in May and go away is also here, and the debt ceiling crisis. So let's get straight into it, and let's start off with that. The debt ceiling crisis. We have a new X date, which is June 1st. Now, the last time the markets freaked out about the debt ceiling was 2011. Now, Evercore pointed this out yesterday, and I pointed this out to all of you guys, that May 2nd, 2011 was the first drop in the markets. It was the peak of that cycle. And then the markets fell about 21%. Well, this time is pretty similar to then. You have a lot of people divided in Congress. Obviously, Democrats, Republicans can't really agree to much. And they pointed out that you really want to watch today to see kind of how the markets trade. If May 2nd continues and repeats itself as the high, and then we subsequently start to fall, well, it could be a similar cycle. And last time that happened, S&P 500 dropped about 21% based off of debt ceiling fears. So that's something that I am paying attention to, and it looks like that is pretty much what is happening today. S&P 500 down about 1.5%, but the economic slowdown, those worries are here. Job openings fell more than expected in March to the lowest in nearly 2 years. Job vacancies totaled 9.59 million for the month, down from 9.97 million in February and below the FactSet estimate for 9.64 million. Orders for manufactured goods increased 0.9% in March, less than the 1.3% estimate. So less orders, right? Less factory orders and less job openings. This should be a positive thing for the fight of inflation, but it is showing the economy is slowing down. Now, couple that with earnings that really, they're not great. Year-over-year numbers for earnings, not great. Yeah, sure, companies are beating on earnings. They're beating their estimates, but when those estimates are so low, is that really a good thing? It's arguable, right? So that's a big story of what is happening today as well. And also this, home prices are back on the rise as the spring market proves more competitive than expected. Home prices in March rose for the third consecutive month on a seasonally adjusted basis. Again, real estate, big problem with regards to inflation. It does not look like real estate prices are coming down enough to support 2% inflation. So that's another big story of the day today. New listings are 30% lower than pre-pandemic norms for this time of the year. Nearly half of homes on the market are selling within 2 weeks. Tight real estate market still. And this, again, goes against the data that we're seeing today, that maybe that real estate sector, maybe that service sector itself will remain to be too high, and that will keep the Fed higher for longer. When this market is propped up on the expectations the Fed's going to cut rates 2% in 2023, well, that's a recipe for disaster, because we're not rallying because earnings are good. We're not rallying because earnings are coming in better year over year. No, we're rallying because people expect rate cuts, and this data does not support rate cuts. So it's simple as that. Literally as simple as that. Now, like I said, S&P 500 down about 1.5%. You do have Fed Jerome Powell, which will be tomorrow, and he will be very important for this market. And a lot of people are expecting that hawkish pause, meaning that the Fed's going to indicate that they're going to pause at the next meeting. They're obviously going to raise 25 basis points tomorrow, but they're going to indicate that they're likely to pause next meeting, but it still is a data dependency kind of thing. If inflation continues to go higher, or inflation expectations, they will signal that they will continue to raise rates. And after all, if you look at the 3-month inflation readings, the 3-month average inflation, it's going higher, right? Inflation expectations just went higher by about 1% 2 weeks ago. The first time inflation expectations might be showing signs that they are becoming unanchored. I don't think the Fed likes that data, and I think the markets are reacting to it accordingly. And today could be an even redder day. This could definitely be a 2% day by the end of it. So pretty brutal day here on Wall Street overall. Now, you are going to have some earnings as well here in after hours. AMD, Ford, Energy Transfer, Super Micro, Starbucks, Lumen, Livent, Match Group, Caesars Entertainment, and Pay.com. So AMD and Ford obviously going to be big. Starbucks could be important as well, but Ford and AMD could be things that could move the markets. Now, Apple again is on Thursday. That is in and of itself a major catalyst for this market. And if Apple has bad earnings, that is really the last thing that you want to see right now. So there you have that. On top of it, after digestion from this takeover with JP Morgan, regional banks are hitting their lowest point since COVID today. The KRE, the regional bank ETF, is down 7% today, hitting by far the lowest levels that you have seen throughout all of this banking crisis, with stocks like PacWest, or PacW, PACW, go ahead and pull that up. Stocks like PacWest down 35% today. That's not good. Probably going to mean more, bailouts, more banking crisis to come. Is that right? There's no way that's right. Okay, that's not right. But Wall, Western Alliance, I'm like, there's no way that stock is right there. Nonetheless, regionals getting absolutely smacked around today. And that's not good, right? To see regional banks in this position, that is also contributing to the market turmoil that you are seeing today. Now, ultimately, Fed Jerome Powell tomorrow is going to be very important for this market, and he is going to come out at 2 p.m. with the initial statement. Now, this is the statement in which we get little variations to every Fed meeting, right? They're going to say we're going to raise 25 basis points. They might give you some indication of future policy, but it's really 30 minutes later when that press conference comes out at 2:30 p.m. where you get a little bit more clarity, right? You get actual commentary from the Fed, and that is what will drive the markets. We all know the Fed's going to raise 25 basis points. So be on the lookout for that, as well as tomorrow, 10 o'clock in the morning, ISM Services PMI. This will be big because services is really the sticky side of inflation that really just does not want to come down, like, at all. So depending on what that number is, that will be important. You're expecting a reading of 51.5. Last month's reading was 51.2. So you're expecting services to go higher again. Now, AMC stock down about 4% right now. The dollar amount currently sold short is $753.61 million. This number continues to go higher, and this is what makes me pretty dang bullish for getting a short squeeze. If you're seeing this number continuing to rise, that means there's more and more dollars at stake that could be lost by hedge funds if AMC stock continues to rally, or if they were to get margin called or have to cover on their short positions. A lot of people will tell you it's not only the short interest number that is important for short squeezes, it's also the amount that is sold short. in that specific name, and 753.61 million is up about 53 million from 7 days ago when we were sitting at just under $700 million. So that is overall a positive thing in terms of getting a short squeeze, right? Estimated short interest of free float is 25.83%. Questionable if that is accurate here today, given the stock is down over 4%. Free float out on loan sitting at about 34.62%, 178.76 million shares currently out on loan. Days to cover at about 5, cost to borrow at 243.72%, and 100% share utilization. Now, if you take a look at the cost to borrow rates currently, you're looking at a cost to borrow average of 319.5%, cost to borrow max 358%, cost to borrow minimum at 85.8%. So these numbers still looking very, very healthy. The option activity, aka the Stonko tracker data, you're looking at calls in the money on AMC about 20,000, calls out the money 141,000, puts in the money 41,000, puts out the money 110,000, guys. So you really want to watch to see how the markets play throughout the rest of the day today. The initial reaction, banking crisis, getting worse, as well as the markets just falling, not really feeding into a positive thing for AMC yet, but I do think the collateral crisis will continue to get worse, especially as Apple, they're only down 0.86% today, so it's not huge, but collateral is being squeezed from a lot of different places today. Really, you just have to look at the regional banks, and you could see just how much damage is being done today. So I do still think we're set up for a rally with AMC stock heading into earnings, if not after earnings. Typically, that is how AMC likes to operate, right? That's just how AMC does its work. Now, if you take a look at this on a broader sense, go ahead and scroll this out. Still, even though you're down 4% today, not a huge, day. I don't really think this is breaking the trend of AMC. You're still very bullish. You're still well above the 50 and the 100-day moving averages. So I would just sit back, relax, enjoy the day, and see where this thing takes us. If you did want to trade earnings or play earnings with AMC, I think today is your perfect opportunity to do so. Not financial advisor, not financial advice. You could lose all your money, blah, blah, blah. You guys know the spiel. But it looks pretty attractive on a risk to reward basis. Now, RSI sitting at about 55 still, so pretty neutral overall. MACD getting a little bit more bullish today, which is also a very encouraging sign. So, ladies and gentlemen, that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description of this video. We just hit another 300+% gainer with a chance, if ANET closes at 130 or lower by May 19th, to turn $250 into $5,000. If you guys want access to all of my trades in real time, link down below in the description of this video. But that was an over 300% gainer just overnight due to them reporting earnings tomorrow, guys. So that is going to do it for this video. Thank you guys for watching, and I will see you in the next one.